case of the alcohol, getting some relief, because from the economic point of view, we usually tax items that have inelastic demand, just a bit of economics, whereby even if you change the prices, people will not change their consumption behavior. We have taxed this particular product to an extent. The prices have affected the consumption behavior, and then they have now come down. So then with that particular predictability, we might have more entrants in the market. So basically, it might be a plus to some aspect of that particular industry, those who have been affected positively, and basically a negative to those who have been affected negatively. But because they are in elastic demand, if you take 2 beers, you cannot take one because the price has gone up. You always want to push your budget. So that particular aspect makes this particular industry very, very resilient. Despite increasing in taxes. Yes.
Another tax that is definitely going to impact a lot of Kenyans is the motor vehicle tax.
Yes.
And when we talk about the motor vehicle tax, it is not just people who own vehicles, because it will also lead to increases in fares for those who use public service vehicles. So tell us your thoughts in terms of the impact of the motor vehicle tax.
About the motor vehicle tax, there is something here that I've been thinking about, that they're saying the minimum is the maximum is 100,000, and then they're saying 2.5 value of that particular motor vehicle, and then the minimum is 5,000 if I'm not wrong. So basically what it means, if 2.5% is 100,000, then what is 100%? Around 5 million or so, if I'm not wrong. So
up at 4 million, actually.
4 million.
4 million, yeah.
So basically it means if you have a motor vehicle worth around 20 million, you're going to pay how much? 100,000. So you have saved how much? If you had to do 2.5% of 20 million, that is what you're supposed to pay. But in this case, you're paying 100. So you have saved, you as someone who has a vehicle higher than the value of 100%. So then we have someone else. The average value of motor vehicles in this economy is around 2 million, 2.5. So the 2.5 million person vehicle pays the exact of 2.5% without saving. But the person who has a vehicle above 5 million, of course, they are making savings. That is one of the distress in that particular tax. Number two, the other one, it's not an income. Owning a vehicle is not an income. So you're basically taxing a cost. Then you walk into a petrol station, you pay all those particular build-up taxes on fuel, then that particular the same vehicle is being taxed, motor vehicle tax. Then the insurance companies are not revenue collecting agents, also giving them an extra role, which means they'll have to employ extra people to collect this particular revenue on behalf of the government. So it's also inconveniences the insurance companies. So basically, but the most worrying aspect that it is an expense that you want to tax, and basically we should